What's up, Mortgage Coach community? Dave Savage, and I am interviewing Clint Hammond today. Clint, where are you coming from, man? What market are you in?
Columbia, South Carolina.
Columbia, South Carolina. And I am interviewing you because you use Mortgage Coach a lot to be an advisor more than a loan officer. So Tell us a little bit about your model, where your business comes from, a little bit about your production over the past 12 months, and then let's get into some ideas.
Well, we did, when I say we, myself, and then I've got my team, I've got an assistant and a processor, and we did about 73 and some change last year, which 73 million in Columbia is actually a lot because our loan amounts aren't really that impressive. I think that the median house, the home price here in Columbia is about 180 something. So to do that type of volume is pretty. It takes some work. I'd say we did 286 units last year, closed.
Wow.
Primarily purchased. Started to pick up some of the refis towards the second half of the year, obviously.
Well, congratulations. I mean, that's a lot of families served. That is a lot of work, and that is a lot of production. But to your point, if 280 some odd loans in other markets could be a little more loan volume.
Yeah, be a little more impressive, wouldn't it?
Oh, I don't know. I think it's pretty impressive. So congratulations. And what does your team look like? How many people besides you are helping close that business?
I've got a licensed assistant who's been with me for 8 years now, and I've got a dedicated processor who's been with me for about 6 years. And then we've got a third member who we'll call her a floater. She can kind of go back and forth in terms of helping on the process side when it's needed, and she comes over and helps with just the day-to-day and return phone calls, etc. So we've got a team of, it's myself and 3 others.
Okay. And then what about how many realtors, in order to do that kind of volume in your purchase first, how many realtors on any given month or quarterly or however you measure it do you work with?
I've got about 7 that I count on, that I rely on, that I know are going to be consistent. There's
7 core agents.
Yeah.
How many total agents do you think refer to you in a given year?
15 to 20. Like I said, there's some that are the one-off, but there's the consistent ones, and I focus primarily on them.
Well, I love that. I think there's a lot to be learned from this. I interview all types of loan officers, and I love loan officers that get, 100 different agents a year to give them one transaction, and that's clearly not your model. It's going deep. It's 7 core relationships and 15 total, and gosh, that's a lot of business from that kind of referral partner. So you see yourself as an advisor, and I know that because you use Mortgage Coach, but what is I'm going to get to the Mortgage Coach part, but what's your advice like? Why deliver advice versus a fee worksheet? What's your why around that?
I think it makes the conversation and the transaction overall easier when you're approaching everything more as a financial strategy as opposed to just cranking out pre-approvals. I think when you approach it as a strategy, it puts a little bit more meat on it, so to speak, because it's what it deserves to be. I mean, it's a financial vehicle that you're putting somebody in, so you have to approach it as such. It's always, I might as well have it tattooed on my forehead or something, but you'll hear me say things like highest and best use of money on a regular basis. That's almost the recurring theme with a $50,000 transaction or a $500,000 transaction. You're still trying to get the highest and best use of a finite amount of resources that somebody has to work with, and there's an end objective in mind, and you're doing the best you can to get there in a way that's going to benefit the borrower the most. It's kind of simple.
I love that. Yeah, well, it's simple, but it's something you've put a habit around, and I hope everybody wrote that down, highest and best use of money. And so how do you flip the script? Because I'm sure there are some families that call you up and just go, hey, I'm shopping rates. What's your rate? Or, I'm looking for the best deal. What's your rate? How do you approach that type of a conversation where they're trying to put you in the commodity bucket, and you want to flip the switch and get them in the advice bucket. What's that sound like?
I try to steer the conversation in every scenario. The conversation has got to be steered back into something that actually impacts day-to-day life. An interest rate will never actually impact the day-to-day life. A monthly payment will, but an interest rate itself won't necessarily. And I mean, just to use an example, somebody that wants the lower rate, put a 10-year fix together for them and ask them if that rate is actually what they wanted when the payment chokes them to death. And trying to steer it back into what's actually going to impact your ability to get up and go to work in the morning, come home, take care of the kids in the evening, eat dinner with your wife, go out to dinner, take them to Disney World, do whatever. Those things are what actually matters, and so none of that has anything to do with rate. So I'm steering it back into a conversation about what really impacts life.
Got it. So I get that conceptually and strategically. So first, before I ask this next question, what percentage of people do you think that when you get on the phone with them, they're coming at it from a transaction and trust, and what percentage are coming to you with what's your rate and you're a commodity? Like, what is the percentage?
It depends on the source. The clients that are calling me from one of my 7 trusted realtors, one of my 3 or 4 financial planners that send me a good bit of business, when they come to me, I don't have quite as much work to do in terms of setup because they're coming into it knowing that what I'm going to do is a strategy. So percentage of people who come in from the what's your rates side of the conversation, it's probably 20%, maybe 25%. And of course, my previous clients come in and they know what the conversation is going to be to begin with. I mean, there's never any doubt where we're taking it when it's somebody that I've done a loan for in the past.
So here's what I want to do, guys. I want to focus the rest of this conversation on how you trained your realtors and what that process is. But for everybody that's listening to this, I just finished interviewing 7 top producers where it was role playing, and it was what's your rate. So it was that grinder that's shopping banks, and you can listen to 7 different loan officers, 10, answer what they did and how they did it. And they were all top producers. So link down below to that. So let's talk about how you trained your realtors and what you train them to say, so that when they come to you, you've got trust, and they're looking at you as an advisor. What does that sound like, for a realtor to talk to one of your clients when they refer you?
I always encourage, when a realtor is a new realtor, on radar, and we're working together for the first time, I always encourage them to come actually sit down with me for the initial client interview so that they can hear the questions that I'm asking and so that they can understand that I'm not, name, date of birth, social, where you live, where you work. They understand that I'm asking that next level down type of a question. And when they see how that plays out with the borrower, then it starts to click that, okay, we're building something bigger here than just a pre-approval letter. We're actually building a strategy that ultimately, if they're smart and they understand how all this works, that's going to lead to an extremely happy client, and happy clients lead to referrals. So whether they truly understand it or not, they understand the value in it. And then, of course, most of them tend to come to me for their own personal loans, too. So then when they go through it from that side of the transaction, it's extremely apparent. So as far as training them, I don't necessarily train them. I just expose them to it.
Yeah, that's a really good point. And I would push anyone listening to this, one, do you have more than a transactional conversation? If you're delivering a fee worksheet, that is a transactional experience, right, regardless of how much borrower education you do, because there is borrower education like terms, transaction education, and then what Clint does, instead I'm going to ask you to pull up a total cost analysis in a minute, he's doing advice education, like the difference between one loan versus another, and he's showing that, and that's transformational. And to your point, you can tell a realtor that you do it, but until they see it, it's not the same thing. So if you haven't already taken all of your clients through this transformational advice-based conversation, check. You need to do that. So let's go through a TCA and let's talk about how you deliver advice. Do you want to do a purchase or a refi?
Let's do a purchase. We're talking about realtors. Might as well stick with it.
All right. Do you have a total cost analysis you can pull up and show on your screen?
I thought that, let's see here. I sent one, or can you see my screen?
Not yet. There's a little green box in the Zoom where it says share your screen, and I'll tell you when I can see it. And do you call it a total cost analysis to the client, or do you have a different term?
I do. I've actually got a saved email signature that's basically edge for purchase, edge for refi. So that way I don't have to type the email out each time. I just do the drop down and pull it up as a signature. And then in the subject line, I just put total cost analysis and prequal. So it's, yeah, I definitely call it a total cost analysis.
Yeah.
All right, I've got one up if you want me to.
Yeah, show it, and then just tell us the story behind it and give us a feel for how you explain it to a client, because I think those soft skills, those sales skills really make a difference. And pretty cool. It looks like you've got your social survey reviews showing up in the bottom left-hand corner, and I'm looking forward to learning more about this strategy. Go ahead and walk us through it.
I mean, this was just a quick one that I knocked out this morning. We've got a borrower that is contemplating retaining a current primary residence. They've got a pretty decent amount of cash on hand. They've got what they think is sort of their max that they're willing to go to on the price. So what I've done basically is they called me and were adamant that they wanted to go with the 25% down option. And at the end of the day, that's what we might very well end up doing. But what I wanted to do was basically, highlight or give them the actual numbers for the fact that, if you're going to retain that house, it might feel a little more comfortable to have some additional cash still in the bank, as opposed to blowing through your liquid funds just to get into the quote lowest payment you can get. So I put a 15% down with single premium mortgage insurance, and then I've got $10,000 in seller paid closing costs coming back in that scenario, because I want the seller to pick up the tab for the MI as well as all of the closing costs. So the thought process here is, 15% down on 535, they're out of pocket, right at $81,000. Total monthly payment of $2,459, which is under what they said their comfort range was on the payment, by the way. They were looking for something at $2,500 or less. So it solves that part of the equation. If we go to the 25% down, you're talking about an additional, $58,000, give or take, $59,000 out of pocket. So, if they sell the other house, maybe there's no conversation here, but if they do retain, it might be nice and it might make them sleep a little better at night to know that they've got an additional $59,000 still in the bank where they can, float a couple months if there's a vacancy or, whatever the case may be. And ultimately, the payment difference is not going to be budget breaking. I think that most people assume, unless they've, done 4, 5, 6 mortgage transactions themselves, most people assume that there's this huge advantage to, the additional $57,000 down. But I mean, in this case, what we're talking, $300 a month, not even.
Yeah, exactly.
So it highlights the fact that you're not necessarily saddling yourself with this, payment that's going to choke you. It's the value of that cash is what I try to show in this, for this one right here.
Love it. So getting the focus off the transaction, and again, there's just more value for the family in looking at it over time. What percentage of your families are you meeting with in person versus over the phone? If they're local and they're a first-time buyer, I think that they might get a little bit more out of the face-to-face, the sitting down here in the office. So I meet with a good many people in person, especially the first time around with somebody. Once I've done a couple of transactions for a borrower, we normally don't have to have that sit down unless they're doing something that's a little scary. If they need to sit down, I'm always open to it. But I'd say total 20% I'm sitting down with in person.
the rest, I'm doing everything, phone and email.
And when you use the mortgage coach, do you use the live feature where you'll highlight it and walk them through it?
Yeah,
So it's kind of a highlighted experience.
If they are sitting down where they can go through it that way, yeah. I've gotten to the point now though where I can almost go through these without even seeing it myself, because I remember what I've put together, and they'll ask me questions and I can tell them where to go to look for the additional specifics, etc. But I don't do as many with the Mortgage Coach Live as I used to, because I can do it over the phone. I can do it, pretty much real time anyway. If we need to, though, I will.
And then do you ever add a video to it? Is the video feature something that you use? Just curious.
I used to do a video with every single one when I first started using Mortgage Coach, which I guess was probably 2009, 2010 maybe. At some point, we had a little issue in my with my laptop, and it didn't have a camera that worked, and so I got out of the habit of it, and I just haven't gotten back into that routine. But probably something that I probably should get back into. But I'm a talker, so I have a hard time getting the Cliff Notes version into the video anyway. So it's usually best for me to just go over it on the phone.
No problem. Well, let's take down the screen, stop sharing, and let's close out. So I want everybody to think of these features within Mortgage Coach, whether it's the live, whether it's put a video on it. They're like clubs at a golf bag. You don't use every club on every hole, but you should know how to use that club so that when you need that club, you've got it. Putting a video on it, I do recommend. It adds value for the family and the connection. And it also does help net some things out where you might have had a conversation and there's another family member and you just put a video on it to net it out. But I'm fine. I don't think it's a club you need to use on every hole. And Clint, clearly with the type of volume you're doing, you're doing a pretty good job of, killing it. You're giving people what they need so that they're making this next level experience. So I want to kind of go into wrap up mode. But is there anything specific, Mortgage Coach, loan officers, is there anything specific that you think would be helpful for the Mortgage Coach community to know?
I mean, I'm of the opinion that there's a speed limit to how many transactions you can conduct if you are a borrower facing and all, an all-in loan officer with each and every one of your borrowers. There's just only so many conversations you can have over the course of the day. So I've always viewed Mortgage Coach as a way to increase that speed limit because it's a multiplier for me. And rather than me having to put together 3, 4, 5 worksheets, which takes, you got to save each one, and then you got to save it on your computer, and you got to email, as opposed to Mortgage Coach where I can just kick over the one scenario that I want to start with, and then from there copy and adjust for each of the different scenarios. I can put one together in 3 minutes as opposed to 30. So I view that as a way for me to take a speed limit of, say, maybe 250 units a year, because that's just how much time you've got to talk to people, to 280, 290, 300, et cetera, because I can spend less time on the upfront and then focus more of my time on answering questions, reworking scenarios, providing whatever, whatever additional value I need in order to make sure that client's getting what they need and what they signed up for.
Well, it's interesting you said all that, because I've had a lot of people especially in call it lower value markets where they're like, hey, not everybody wants this Mortgage Coach. It's too much information, or it takes too much time. And I think you've made it clear just hearing you, you don't care whether it's 50,000 or 500,000. First of all, they deserve advice, not just price. And then 2, you've become so good at it that it's faster. It's a platform for speed for you, and it's a platform for advice to the family. Could you just speak to loan officers that are like, I don't have time, or my clients don't care about advice. They just want the lowest rate, lowest deal, or they barely qualify, so why should I tell them all this? Could you just speak to that audience?
Yeah, well, one, if you say you don't have time, what you don't have time for is you don't have time to not use it, because I know for a fact it takes infinitely more time to do it the other way. So the time thing is not a good excuse. It's extremely easy to learn once you learn it. At this point, for me, it's almost automated, really. I mean, I know exactly what I'm doing. I kind of have my little scratch notes going in, and then it's, like I said, 3 minutes, I've put 4 strategies in front of somebody. As far as for the market differences, I don't necessarily agree with that either. The $50,000 purchase or $85,000 or $100,000 purchase, when you put something like this together for them, it actually endears them to you a lot more because they're not getting that somewhere else. They feel a lot more important than they otherwise would. They realize that you're not just boxing them into one possible route that they can go. You're saying, look, let's figure out what is the highest and best use of your $5,000, if that's what they've got to work with. And then, of course, your higher end, your $500,000 purchases, they expect this level of detail with a strategy. And if they haven't gone through it, they realize that they've been not getting the service that they deserve with whoever they have used in the past. So it doesn't matter if it's 50 or 500. There's a very good reason to use it.
Yeah, I love that. And you'll notice that, like, he wants them to learn something they didn't otherwise know. Like when I interview top producers that have, call it the advice why, they're not just in the mortgage transaction business. They want families to learn something they hadn't thought. They want them to consider their mortgage as something more valuable than when they walked in the door. And Clint can clearly do that. So mortgage coach community, if you got value from this, give us a like. If you have a question or a comment, post it down below. Clint, are you cool with sharing a TCA link just so we have a sample down below and I can show that to folks?
Sure. I email that over to you, or can I share it?
Yeah, just email it to me. And then if you could include one of your templates, just so we have your template on file.
Sure.
Because I always find it interesting how different loan officers frame it differently. And so my friend, any closing thoughts? We're going to go ahead and wrap it up now. I'll give you the final thoughts, any wisdom, any shout outs to other loan officers watching this.
I joke that I put this amount of detail into it when I'm talking to my borrowers because I'm lazy. Because when they call me back next time, we've already done this. So we're going to have to, we're going to skip over all of the other, static and go right to the heart of it. And they're going to remember exactly what I sent them last time and say, okay, how is this one different? And it's great that they expect it from me now. If I don't send it, they get upset with me. They say, well, why didn't you send me the? So, I mean, it definitely saves time. It definitely solidifies relationships. So,
love it.
I wouldn't be able to do it without it.
Well, we appreciate you. Here at Mortgage Coach, our goal is to reinvent the mortgage experience for every family. We believe they deserve more than the transactional triangle, rate, payment, cash to close. We believe that they deserve mortgage strategies so they can figure out the highest and best use. And then we also believe that every loan officer deserves the success of delivering more than price and advice. So if you are not on the Mortgage Coach team, there'll be a link down below to get a demo. If you are on the Mortgage Coach team, get every family a TCA, because that's the other thing. You hear how good he is and how fast he is. You can't get there by doing it sometimes. Like if you do something sometimes, you get good at it. When you do something all the time, you get great at it. And Clint, you're awesome, dude. Thank you, brother. I appreciate it, man. Take care.
Absolutely. All right.